Welcome to the condensed version of the daily video update, where I'll go over the action in the market for Monday, July 31st, and then we'll see how things look for Tuesday, August 1st. The first thing I want to say is thank you. If you don't watch the full-length video, I did this in that video as well, but I finally reached 1,000 subscribers on YouTube. That was a personal goal, and I'm very grateful to get to that point. Even though I've spent my whole adult professional life being an educator, I'm still just amazed that I can do videos that people actually want to watch. So thank you to all of you. It's very much appreciated, and it's a personal goal that I really am glad that I was able to achieve. You might see some changes going forth. I'm playing around with the thumbnails again. Not so much for the condensed version video. I'm still working on that. But on the full-length video, I'm changing things around. Any feedback that you might have, I would really appreciate that, both positive or negative. Let's go back and talk about what happened. The broad market did outperform on Monday. The mid-caps are hanging in there, but we're seeing more broad participation in areas that had been weaker that are now starting to show some strength. Small caps were finally able to break above resistance. On the Russell 2000 index, there's a resistance level that we finally were able to get above and then close above that point. We still continue to ask this question about this positive scenario. Are we going to have a soft landing? Is the Fed almost done? Does the future look good as far as earnings are concerned? So far, the market likes those things and has developed this kind of an attitude. Now, this can change at any time, but for right now, it's still continuing. On a short-term basis, we have the Williams percent R as well as the CCI based on 14 periods and the stochastics. All of those are looking extreme positive. On one hand, you could say we're extended to the upside and due for a pullback. On the other hand, it also is suggesting good momentum. The same thing can be said about the intermediate term overbought conditions. We have the rate of change going back 50 periods, the PMO studies, the Sean trend meter, and the bullish percent index for the S&P 500 as well as the NASDAQ 100. On a long-term basis, we're still looking a bit extended with our 150 and 200-day moving averages, but they are declining. The dollar was up and interest rates were down. The yield curves that we watch still remain inverted. Sentiment is still extreme at 78. Our trend is positive, but the green line continues to come down. It's kind of turning up just a little bit, but it hasn't really shifted over positive. We are above 40 with the ADX, let alone 20, suggesting it's a strong trend. We might be overextended to the upside, or it could suggest that we're just seeing good momentum. Our bias is positive, and I'm still keeping our momentum at mixed to positive. The economic reports that came out, we just had the Chicago PMI at 42.8. They had expected 43. Last time it was at 41.5. Here's the intraday chart where we did see a gap up. We immediately went up to R1 and then shot right back down, went negative, came down to the daily pivot, and then we spent the rest of the day chopping, a little bit higher, a little bit lower. We spent time going above and below the unchanged level and pretty much staying above the daily pivot. We did drop at the end, but then there was a big buy program that came in right about at the close to push things positive. We would have been negative had that not happened. Here's the intraday chart for the S&P growth versus value, where we did end up closing a little bit lower after seeing some strength, but it is climbing back from where it was looking more negative. The condition of our trend, the ADX is above 40, it's above the moving average. The green line, it's trying to turn back up a little bit, but it is declining. However, we still default to the positive trend. Looking at the daily chart, we're still having a difficult time getting above this upward sloping trend line. We do have some other resistance above where we're at right now with previous highs. We'll have to see, is the market too exhausted right now, or are we going to be able to push higher? When we look at the bottom, we were a little bit below average with volume. We're coming up to the 50-day cycle. We don't know if this is going to have any impact or not. Sometimes it's marked a bottom, other times a top, other times it's been irrelevant. But just know that August 1st is the start of a new 50-day cycle. We're also keeping an eye on the NASDAQ, which is looking a little more negative, even though it's showing some improvement. We were up barely in Monday's session. We're seeing a longer-term negative divergence with the PPO down below, where it made a lower high when price made a higher high. We're negative with the PPO, but it is trying to turn back up. We'll have to see if it can get back above the moving average. We're also looking at the FANG index, where we came up, we set a new all-time high, fell back, we're coming back up to the previous high. Is this going to act as resistance, or are we going to be able to break through and set a new all-time high? Looking at the S&P weekly chart, we're still above this upward sloping trend line. I'm still calling this resistance for right now. We have to wait and see how this will play out. We're above it. Can we stay above it and go higher, or is this going to present a problem and we're going to start to go lower? We're seeing pretty much that same thing with the NASDAQ 100 weekly chart. We're just above this trend line for right now. When we look at the ratio, we're getting pretty toppy there when we compare the NASDAQ 100 to the Dow. This is a weekly chart as well. When we came up to these high levels before, this is the problem area that we saw right before the dot-com bust. It took us 20 years to get back. We got back up to this level right at the end of 2021. This is when we topped out and had trouble in 2022. Is that going to be the same kind of problem this time? So what's our outlook for Tuesday? We do have influential earnings reports that will be released this week. This will include Apple, Amazon, Merck, and Qualcomm, and a whole host of other companies. There's no scheduled Fed speeches for the month of August. The technicals are positive. You could say that's good momentum, but we're also becoming overbought. On the other hand, we have some pretty significant longer-term overhead resistance above where we're at right now. The economic report's coming out on Tuesday. We'll get the final S&P Global U.S. Manufacturing PMI. Construction spending will be coming out. The big one is going to be the ISM Manufacturing Index. The JOLTS job openings will also be coming out. We're keeping an eye on all of the geopolitical events, but still the market is fixated on inflation and interest rates. Here's the updated economic calendar for the week. The big one is going to be on Tuesday with the ISM manufacturing. We're going to get the non-manufacturing on Thursday, and then the employment report will be coming out on Friday. I don't go over this that much, but I will right here. This is the backdrops that I keep talking about that are looking positive. Going back to 1950, the January barometer states that after that, we follow what happens in January 83 1/3% of the time. We have a 3-0 score with our trifecta. The Santa Claus rally, the first 5 trading days, and then the January barometer. When that happens, going forward from February, we're up 87.1% of the time with a 12.3% average gain. If you take the whole year, we're up 90.3% of the time with an average gain of 17.5% in all of the years. The markets also like that we're split between Republican and Democrat in Congress. Also looking at the month of August, over the last 72 years, we're up 55.5% of the time and down 45.4% of the time. We'll also have options expiration to deal with soon in the future. Looking at August 1st, we're negative for the Dow and the S&P, where we're neutral to positive with the NASDAQ. We're also keeping an eye on the NASDAQ for this weakness going into the early part of August. We will be on the first trading day, where we also see some weakness on this day. Historically, we tend to see some weakness in the first part of the month. We might see a little bit of a bounce to choppiness in the middle part of the month. If we see some historical upward movement, it will likely come near the end of the month. When we go back to 1950 and look at all the pre-election years, the S&P is up 50-50. So it's a coin toss at that point. So our scenarios, we're not going with the down one right now. We're still looking quite positive technically, but we could say that we're becoming overbought or that that's good momentum. We're tending to lean towards the positive side right now because our technicals are pretty positive, but please be aware we are becoming overbought. These overbought conditions can last for a long time. We're still dealing with that overhead resistance. Keep in mind, try not to front run the market too much because we are pretty positive in the background. We're not going with the sideways trend because our ADX is suggesting that we're in a strong trend. The green line's on top even though it's declining, and so we default to positive. The warning signs. Are we going to see a convergence of these short-term bearish signals? Haven't really seen that much lately. Some of these factors come in and then they go away, but they don't really seem to come together to really push us lower. The longer-term trend signals on the weekly chart, they may be signaling a top. So far, they're not doing that. We're just keeping an eye on things to see if that will happen. Seasonally and historically, we're coming into a weak time of the month. That was the end of July and the first part of August. The oscillators are turning negative, especially in the short term. We're more flat in the intermediate term, and we're still looking okay in the longer term. It's the NASDAQ 100 that we're really keeping an eye on. The VIX is showing complacency. It's acting kind of strange. The NASDAQ cumulative new highs, new lows continue to show weakness, but they are improving, but longer term, they're still declining. The 3-month yield is even above where it was back in 2007, and it just keeps going up. S&P 500 growth is weakening, but it's still in an overall uptrend. The weekly pivot may be acting as overhead resistance, and I brought that out more in the full-length daily video. Earnings season, we just kind of have to deal with that on a case-by-case basis. Positive signs. We do have positive seasonality and setups that are in the background. The daily special K chart, it's still positive. The weekly chart, although it's improving, is still negative. The longer-term equity put-call ratio is positive since it is declining. The S&P remains above the downtrend channel upper line. We're still in a risk-on posture. That is starting to improve again when we look at that ratio. Lower price levels may provide support. We haven't really tested this all that much. If we do start to decline, what kind of support levels are we going to hit? Will it be a fib level? Will it be a moving average? Will it be a previous high? We'll just kind of keep an eye on all those different areas. The S&P is outperforming utilities. The NASDAQ and NASDAQ 100, they're above overhead resistance on the weekly chart, but they still are below daily pivot resistance and haven't been able to break through that yet. The Staples to S&P 500 ratio is declining. The Russell and the small cap index, as well as the mid caps, have generated recent golden crosses. Small and mid cap growth is positive. The Copic curve, even though that signal may go away pretty soon, it's still positive. The Pring bottom fisher is still generating a buy signal. So our conclusion, the S&P remains positive. It's becoming overbought, but also keep in mind, this could also suggest good momentum. We could also say the same thing in the short term and the intermediate term, and we still remain positive in the long term. Thank you. I hope you found this helpful. Have a really great day, and I will talk to you in the next video.